Joining us in the studio now is Syd Vianello, retail analyst at Nedbank Capital. Syd, thank you very much for your time. We're going to move straight on to some news flow. Clothing retailer Truworths expects first half headline earnings per share to be between 11 and 15% higher compared to the same period last year. Group retail sales increased by almost 11% to 4.8 billion rand, while product inflation averaged 8%. Here to make sense of the numbers, as I said, is Syd Vianello. We've had a slew of retail data out. Let's start with Truworths and your thoughts on that front.
Yeah, I think what you really want to do is you don't want to look at Truworths in isolation. You want to take all the retail numbers that have come out. And I thought to myself, maybe I'll give you some idea of what were the common themes.
Exactly, that would be great.
Right across the board. And there are two or three that really stick out. Number one is everybody, and I'm now including, and I won't say who, some of the unlisted as well, many of them are friends of mine. Everybody experienced a big rush, surge in sales in the December month, in the last 6 weeks. Of course, by default, that means October and November, as one of the private companies said to me, October and November were actually mediocre. But suddenly, December came to light. And if it weren't for December, of course, the numbers would really have not have been good for anybody. I haven't had a chance to dig into what were the possible reasons why consumers held back in October, November, or alternatively, why they went berserk in December. Possibly it has something to do with all the problems around the world that made people nervous in October, November, and in December they probably felt a little bit happier. Maybe I was just thinking aloud today to myself, maybe a lot of people didn't go on holiday, stayed at home. Maybe they had extra money, which they would have spent on holiday, and they went out spending. But that's the first theme. Everybody experienced a big rush in sales in December, whether it be clothing or whether it be food. Interestingly,
before we move on from that theme, Vickers, any comment on that front?
I would guess from my side, I would say we've been waiting for a while for the stimulus in the economy to come through. So if there were factors holding it back in October and November, certainly December could have been strong. But I take your point about people spending time in the mall rather than on the beach as well.
Yeah. What we don't know, of course, and hopefully some of the retailers will, when they actually publish those half-year results, we need some kind of clue, some kind of guidance as what's happened post-December. Is this a flash in a pan, or is it something that could continue? I'm a little bit worried it's...
Do you believe it's a flash in a pan?
Well, I'm a little bit worried it could well be a flash in the pan because nothing, to my mind, has really changed. That's number one. But let's overlay that with number two. Number two is right across the board. Inflation has crept into the system in a big way. A year ago, food inflation was 1%. Now they're talking of 5%, but what you must really look at, what is the run rate in food inflation? You take Woolworths. Woolworths' inflation rate in a period of 6 weeks jumped over 1%. That means that for the 6-week period, the inflation rate in food was somewhere between 7 and 8.
Would you go so far to say food inflation is out of control in South Africa?
Well, it's getting out of control. Apparently, I haven't dug into the inflation figures that came out today, but apparently I heard on the radio tonight, somewhere driving home, that the official food inflation based on government numbers is closer to 11%. Now, what that means is that whereas a food retailer is currently, or has, for in the case of Shoprite's case, for 6 months reported aggregate food inflation of 5% for the 6-month period to December, you know full well that by June, the run rate's going to be closer to 11 because they mirror the economy.
This is a clear risk for
you know
food
this is coming.
It is a risk for the food retailers because they're getting squeezed between their input costs and what they can pass on to the consumer. Now, what we've seen in terms of spending right now is that there is strong spending, so they are able to pass it on, which is actually more of a risk for overall inflation accelerating because if inflation keeps on flowing through. The one thing we have to say is that food inflation is the most volatile part of the consumer price index. So typically when inflation is rising, food prices are rising faster. When inflation is falling, food prices are falling more. So it is more volatile than the rest of it. But the structural issue we have to deal with is that especially on food, there's a massive global demand for food and especially proteins. Where people in China and India are switching from rice to chicken, that puts international pressure on food prices. And if you have a fairly weak currency and you have those international food prices going high, we're actually very sensitive to global food prices.
Well,
so it's likely to stay.
I'll just give you a perception. I was out the country for 3 weeks on holiday. So I wasn't part of the spending in
We want to
December.
know where you went on holiday
No,
before you go any further.
I was in America.
In
Anyway,
America, all right.
the bottom line is I get back and I walk through the mall. The price of maize mealie meal, I notice since early December through to mid-January, I swear has jumped 20%.
20%.
20. It's gone from an average of 25 to 31 rands for a 5 kilo bag. The first time I've seen it above 30 rands in many, many years. This is the kind of thing that's happened. And this is going to have a ripple effect. Chris Skitter, the MD of Astral, wrote in his annual report, or was quoted somewhere, as saying the price of poultry, processed poultry, is going up 20% this year. He's got no option because obviously the problems with maize exports, which have now got to be replaced with imports at double the price, has had an impact on his business. But the fact is, he's got to raise his prices because his input cost has gone
I'm
up.
cognizant of time.
That's still coming.
You've said there are two risks. Flash in
Yes.
a pan when it comes to December
The third
so
one.
far.
The
and
third one.
yeah,
The
second
third
one was
one.
inflation. I'm just
Yeah.
taking our viewers back a step. The third one is what?
Is particularly in apparel, the retailers have been using credit to push sales. Foschini didn't talk about it, but in the half-year results they did talk about it, and I guess it's continued. Truworths, it's evident from the numbers, from the stats which they gave. In Mr. Price's case, it's evident once again from the numbers which they released. So the retailers have been using credit to push sales.
Before we go any further, quickly give you an update on Foschini. Rival Foschini of Truworths, of course, meanwhile reported a 17.3% rise in sales growth. That's for the quarter ended December, thanks to encouraging trade over the Christmas period. Coming back to what Syd is saying, is this a flash in the pan? And the group's same-store growth grew by 11.4%, while merchandise inflation for the period averaged 6%. Back to you.
We know from history, and let's go back to the Edcon story many years ago. The moment you close the taps and you can't find any more customers, because remember this thing, you've got to maintain the momentum. The moment you run out of momentum, your sales growth starts falling back dramatically. And I'm a little bit worried that some of the retailers are pushing it now, but there will come a time, maybe 2-3 years time, maybe earlier, that it starts coming back at you, particularly now that the debt's got to be repaid. Those are three major themes. Another theme, an interesting theme, is in his history has shown, this is what I've worked out over the years, found from my own research, when food inflation up to about 9%, the market, in other words, the consumer absorbs the food inflation and cuts back on other product. The moment it goes above 9, he actually starts cutting back on food units.
Sid, I want to come back to valuations now across the board. Now, we know retail stocks have pushed higher and higher. They've surprised everybody.
Yeah.
What is your stance at this point? Because they've surprised you.
I wrote in December, I thought that right across the board, retail shares were overpriced. And in fact, maybe I came in for a lot of flack. I don't know how the institutions felt about it.
They have continued to push higher.
Well, not really. We had a look today. How do the share prices compare with where they were on the 5th of December, which is the date of publication? And I'll tell you, with the exception, there are two exceptions. One was Mr. Price, which is about 7% higher, and the other is Massmart, which is 10% higher, for reasons only known to itself.
Because I'm going to get you to jump in here.
Hold on. The others have hardly moved.
Have hardly moved in 6 or 7 weeks.
I guess to some extent what we've seen is that the market has expected retailers to do reasonably well for a while, because of the low interest rate environment and the stimulus, etc. And it's starting to come through. But the question in markets are always, is it better than the market expected or is it not? And so essentially what you're saying to us is only 2 of the retailers have really performed
since the 5th of
better
December.
Since the 5th of December.
And ironically, Mr. Price has perceived to have performed a little bit better. Mm-hmm. But in the case of Massmart, it hasn't really. Now, I've obviously got to measure it up against my own forecast.
Indeed.
As a generalization, the numbers are only marginally, with the exception of Clicks, which is down below what we thought. Marginally, but I mean very marginally ahead of what we expected. There are to me, even You know,
But let me go back, because I've got to, and I'm running
Yes,
out of time.
no, I
But there
know,
are two
I
things that
know.
I've got to ask you. Before the 5th of December, what were you advocating people do with their retail shares in September of 2011?
In September, we had 2 or 3 buys. And in fact, 1 week before the 5th of December, when I was looking at the ratings and working out what I was going to call, buy, sell, or hold, I actually had 2 or 3 buys.
So you were bullish on the sector?
In 1 week, terribly, 1 week just before the 5th of December, all the retail shares, the entire sector went berserk. And suddenly, in the report dated 5 December, we actually had virtually every share
I'm out of
as a
time.
sell.
Very quickly, 20 seconds left. What do you forecast going forward? What should we be doing with retail stocks as we speak today?
I wouldn't be buying them now.
Would you be selling
Nothing.
them? If you hold them, would you sell them?
My problem is, every time I say there's a sell, or people say, would you go short? I come out on the wrong side. I would keep what I've got,
My
but I
producer's
wouldn't be
desperate.
buying.
My producer's desperate. Right, Syd Vianello from Nedbank Capital.